Hello, everyone. My name is William Mucker. I am a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Unlock Your Investment Potential, Discover the World of Single Tenant Commercial Real Estate with Solomon Thomas. As a quick note, please be aware that Solomon will be answering questions at the end of the presentation. However, feel free to use the chat and/or Q&A function on your screen to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, Solomon.
Hi, welcome everyone. My name is Solomon Thomas with Thomas Management Real Estate Group. We are a real estate syndication firm where we purchase single tenant triple net properties with investment grade tenants. What that basically means is if there is a single structure, there's one tenant inside, and there's zero landlord responsibility, and that tenant is of investment grade, such as 7-Eleven, Starbucks, Dollar General, Dollar Tree, et cetera, et cetera. Okay, so I'm going to begin to share my screen with you all to go through our presentation. Okay, but first, I would like to share the 5 strategies that we believe are used to ensure that you don't miss out on a great real estate opportunity. Okay, and I will also conclude with a bonus way. First, safety and security. I think it's advantageous of us all to look at opportunities with regards to investing, that they are safe and secure. Okay, this means that even if the business face challenges or defaults, and that the investor's principal might still be protected, okay? And there's a high level of security. And that's why we choose to invest in single tenant properties that are with investment grade tenants that are corporately guaranteed, which means 7-Eleven, Starbucks, Dollar Store, Dollar General, Dollar Tree, they have vetted this a particular location to say that this is where we want to be, and we intend to be here for the duration of the lease and or the extension of that same lease. Okay, and priority in payment, corporately guaranteed. In case of the tenant, God forbid, files for bankruptcy, need to liquidate and or vacate the premises, it's corporately guaranteed. It protects the investor's investment during this time period. Okay, flexibility of choice. One of the things that we pride ourselves on is vetting properties with these tenants that are quote unquote recession proof, i.e. a FedEx distribution facility or an Amazon distribution facility, where if there is an economic slowdown, these services or the services that they provide or that tenant provide, they are still being used. And we've, of course, experienced this during 2020. And even when it came to stores like Dollar General or 7-Eleven, they were need-based businesses. Okay, so they remained open, and the gig economy was able to service both the consumer and the merchant. Okay. And diversification. Caliber Collision is another, and or O'Reilly's is another tenant that we think provides a need-based service. given any economic situation. Because if you have a vehicle, people still need to travel, whether it's to the grocery store to get the necessities, to work, to visit family. They would like to make sure that their automobiles are taken care of. Okay. So between these different industries, 7-Eleven, convenience, Caliber Collision, automotive, distribution centers, infrastructure, diversification allows us to balance out our investment strategies. And once again, Thomas Management Real Estate Group, we focus only on single tenant, triple net properties. There are some instances where we see an opportunity, such as a Dollar Tree or Dollar General, that are double net plus, which means the most responsibility as a landlord that we would have would be a roof, which are, especially if it's a brand new structure, has a warranty over an extended period of time, and or the structure. So currently we are evaluating several properties that are both single, triple net and double net plus that are all new construction with these investment grade tenants. Okay. And these are some of the brands that I mentioned and some of the brands you may be familiar with in your local area. Okay. So what we do, how it works is we vet the properties and evaluate according to several points, such as triple net, corporately guaranteed, term of the lease, 10 years or better, investment grade, triple B rated or above, and particularly if they are new construction. Okay, so that's what we do. And then we manage those properties and work with our co-owners and or co-investors to capture the full revenue from the lease. So when we talk about zero debt, we don't take out a mortgage on the property. We rather absorb and disperse the income from the property for all investors involved. Okay. A little bit about myself. I've been in the industry for over 20 years, either as leasing agent, property manager, and investor, rehabber, back in 99, and mortgage loan officer. This is my passion. This is what I love. I got into the industry because as a junior high school student, my parents bought a property, and it was an abandoned building. And my father was a truck driver, and he would go after work to start to repair the property, rehab the property. And this was a home. This wasn't necessarily a fix and flip. You know, this was back in 88, 89. And when it was all said and done, this 3-family mixed-use property, which was 2 apartments upstairs, a storefront, and then an apartment in the back, our family occupied the top floor, the top 2 apartments. The apartment in the back, his friend lived there, and the storefront, he made his karate studio. My father was a master martial artist. And one day, while I was performing my chores, doing my chores, sweeping the stairs and sweeping the hallway, he told me to collect this thing called rent. And at the time, it was odd because I remember hearing my parents say what they could and couldn't do based on them having to pay rent. But all of a sudden, we were collecting rent. And in the 80s, late 80s in New York, it was a trying time. There were a lot of opportunities for, young men to get into that weren't necessarily good for their overall growth and development. But I was in my house where my parents were, and a guy put a wad of cash in my hand. And I've been addicted to real estate ever since. It's been a passion of mine. Graduated high school, went to the military, came back, worked with the Board of Education, worked in corporate America, and then realized, okay, so I want to change something. I want to do something different. And I remember the seed that was planted by my father of owning real estate and collecting rent. And that's when I started to dive more into the industry and learn different trades or professions in the industry and continue to grow and develop myself. Okay. So as I grew to do that, I was introduced into the commercial space. And I said, great, if I was able to provide someone an apartment and or manage apartments where people experience a decent and or great quality of life, how can I expand and grow and offer that opportunity to not just the tenants, but to the investors, and it worked for everyone involved? And that's how this opportunity was born. So we see that there's an opportunity for us to yield a cap rate anywhere between 3 and 8%, okay, based on prices from 2021 up until today. And our portfolio, our properties are in various locations in multiple states that are 100% occupied. Okay, these are brand new properties, and we'll go into a little bit more detail as we continue. Okay, so with all that being said, I was able to develop an extensive or decades worth of experience in the industry. Being in the military, traveling and investing in real estate allowed me to develop a local mastery that can be scaled, but also have stability. So when we scale, we talk about investing in multiple properties through different industries, but have the stability of the companies performing effectively, i.e., need-based businesses, and they are corporately guaranteed. And throughout my experiences, throughout my time in the industry, I was able to build a robust network and relationships, okay, that allowed for great foresight to see what are some great opportunities that are in the forefront. Currently, all of the properties that we are evaluating are and that we are ready to purchase are off market. And that's the benefit of working with someone like myself and or the firm Thomas Management Real Estate Group, is that our relationships go beyond what is shown to the general investor public. Okay. And we, once again, we go straight to strategic, number 6, necessity over speculation. Necessity, need-based businesses. Okay, we all need milk, water, food, need to take care of our cars, to travel, get back and forth to work, to visit family, take care of our loved ones, et cetera, okay, which seamlessly leads into a proven performance. These businesses are around, and consumers of all economic background use these services, these goods and services, okay? And it allows us to participate in a steady, consistent flow of dividend or lease payments, okay? Great assets and great location. As you can tell already, it's a very simple business model. Okay, we leverage the operational excellence of attorneys, of agents, of developers who create these businesses or buildings for some of these investment grade tenants and are ready to, transact and allow investors to reap the rewards. Okay, which in turn creates great value and opportunistic rental activities. Our goal is to have a strategic territorial focus, i.e. MSA, metropolitan service areas. We look for assets that are in either great areas or great up and coming areas that serve that economic demographic. Okay, so whether it's a Dollar General, Starbucks, or a distribution center. So we're either we're servicing everyone who lives in the community, but if there is a need for job creation for a large amount of people, distribution centers fit that bill. If there's a large community of people traveling back and forth to work, i.e., highways, main thoroughfares, et cetera, that's where Starbucks they're generally located. Okay, and if it's more residential and more homeowners or renters, the Dollar Generals, 7-Elevens service that part of the community. Okay. And these are value driven properties, once again, because they are corporately guaranteed, triple net, limited landlord responsibilities. Dollar General, 7-Eleven, Starbucks, they know how their stores work. They know the layout. Okay. This is what creates a value driven property. Let's just say McDonald's, for instance. If any of us walk into a McDonald's in any state across the United States, we know 9 times out of 10, if not 10 out of 10, the fries are going to be on the left-hand side. Okay. They know that formula works for them. Okay. We take our industry partnerships very seriously. I have meetings all day long, and I enjoy the team that I work with, whether they are potential staff members, of agents, attorneys, title, insurance company. We have a very, very, I wouldn't even say unique, but just a passionate group, people who are passionate about their craft, that allows us to see great opportunities and capture them. Okay. And then turn around and make these unparalleled acquisitions and then pass the opportunity or share the revenue on with like-minded investors, like, those of you who are work with CAMA or CIDRA, self-directed IRAs, and you're working with CAMA Plan. This gives us an opportunity to share with you all. Okay. Our goal, and currently we have over 400 million properties that are ready to be acquired, that are all single tenant and double net plus or triple net opportunities with embedded growth. And when we talk about embedded growth, we're talking about after the lease term, there are usually bumps after the lease. Every 5 years, the rent increases. So there's embedded growth in this. So as prices rise, inflation, just the nature of economics, that's built into these leases. Okay. And efficient operations, these companies, these tenants have been in these properties, have been in their industry for decades. They know what works. They know where it works best. Okay. And the technology and the sustainability and the local expertise just kind of rounds it all out for us to provide this solid and stable opportunity. Okay, here are some more brands that you all may be familiar with that we've either used, driven past, and or supported in one way or another. If someone asked, I just started drinking coffee, to be honest with you, maybe about 2 months ago. But, I've been to Dunkin' Donuts before. Oil change every 3,000 miles. It's advised that we get an oil change on our car. Okay. The Vita dialysis. I've had family members that have had to use the services of dialysis. Okay. And they're across multiple states, North Carolina, Omaha, Nebraska, North Carolina, Nebraska, Florida, Texas. I'm just excited. I truly, truly love it. And you can tell, and I hope you can tell. And then also, this is what I was kind of like given to do in life from a young man, with my parents buying that property and introducing real estate to me. Okay. I told you about my experience. We currently have, different sets of attorneys and accountants that are helping and working with us to ensure that we minimize the risk and leverage any and all opportunities in this sector, the commercial real estate industry. Okay. Current occupancy is 100%. The target occupancy is 100%. Why? So we can run away for effective NOI, net operating income. Okay. Focus on key territories. We like to scale the opportunities, and scaling, i.e., meaning if we have a relationship with a developer who just built a Dollar General for Dollar General, say, hey, listen, we're building X amount more. Are you interested? Are you and your investors interested? Yes, that's how we scale our opportunity. And when we talk about redevelopment potential, even if a Dollar General or Chipotle or 7-Eleven has been at a particular location for an extended period of time, and they would like to revamp their store, they would hire a developer to do so. And there's transactions that go on to make that a strong tenancy and an excellent opportunity for us to acquire that property. Okay. Excuse me. So when we speak to investors, co-investors, and partners, we share that we would like, and the goal is to reduce their investment or ownership in 2 to 5 years, which means that they would have their principal return along with their interest in 2 to 5 years. Okay. We talked about the properties that we are ready to take down right now that are income generating. Excuse me. Speaking, you got to continue drinking. So, a portfolio of FedEx distribution facilities, portfolio of Dollar Generals, portfolio, a few 7-Eleven, O'Reilly's, Caliber Collision, totaling about $500 million worth of real estate. Okay. We are not stopping there. We are actively exploring opportunities. We are evaluating a few top golfs, and Amazon distribution facility. We stay focused and hungry and boots on the ground and ears open and communicating effectively with our team members to bring the best opportunities forward. Okay. Obviously, this is an aggressive acquisition drive. Why? For us, for me, having been in the industry for so long, I just see this as a phenomenal opportunity. For those of us who own cars, we all need tires. We all need to change our oil. Why not own a business that services car owners? And then that same car needs gas. And then while we're getting gas, we'll grab a coffee. For those who smoke, they'll grab cigarettes. For those who eat candy, they'll grab a donut, grab a sandwich. It just works well for all of our needs, all of our wants and needs, okay? Strategic focus, ground up potential. Our goal is to primarily only focus on new construction. If there's a redevelopment of a 7-Eleven and they're trading, we'll look at that opportunity. But 9 times out of 10, it's a ground up opportunity, brand new store. 7-Eleven, Mavis, Chipotle. Most of these businesses have done the due diligence, and I'll go through a offering memorandum that shares why any particular retailer say they want to be at a location. Okay. Investment grade tenants, it speaks for itself. Okay. All of the tenants are currently rated by Standard & Poor's or Moody's. Okay, we're going to take our decades of experience, provide profitable opportunities with a direct approach. Okay, I definitely will address that question like something came up in the chat toward the end of this. Okay. Capital access. We are prepared to seize capital in a multitude of ways. One of my passions is for accredited investors who aren't institutional investors to say, hey, listen, here's an opportunity. Okay. Smart acquisitions that these tenants provide us with a robust finances. I've taken my multifamily mastery, my single family mastery, my experience as a loan officer, and cultivated it into this opportunity that's going to leverage and bring us a strong financial foundation that maximizes value. Okay. That creates, lastly, an opportunistic investment. Okay. So I think this would be a great opportunity to pause for a second while I can answer this this question in the chat. Okay. So it says, these investments with you, we invest now. In a few years, you return the investment plus interest, and then we are out. Is that right? That's correct. How much is the rate of return? It's going to be anywhere between 4 and 8%. Okay. So at this time, I think, yep, it's still there. I put a direct link to our portal, which is a third-party portal. Okay.
Just to note, Solomon, you were sending that message to hosts and panelists. You can change that to everyone and send that again.
Okay, excellent. Thank you.
No problem.
Everyone. Okay. There you go. Appreciate you. Okay. So this is an example of a property in Griffin, Georgia. Okay. This is an upgraded Dollar General. So when we talked about redevelopment and on some of these properties, this Dollar General was probably there for an extended period of time, and they saw that according to the demographics, it worked to be there. Okay, they have 15 years left on the lease. It's currently trading at $2.4 million with a cap rate of 4.7. Okay, so with this property, you can see it's investment grade, rated triple B. Okay. Dollar General reported 31 consecutive years of same store sales growth. Their rent is $115,000 a year. Gross income, $115,000. How is it gross? There are zero expenses for the landlord, for our firm, for our co-investors. There are zero expenses with this particular property. Why? Dollar General knows what it takes to have a Dollar General facility. And they have their internal maintenance crew, team, division maintain the property to the standards it takes to have an effective operation at this location. Okay. Zero landlord responsibility. Okay. This was redone in 2022. As you can see, it gives you the breakdown on the roof, the zoning, parking lot, how many spaces, the warranty, the renewal. We talked about the bumps earlier. There's 10% at each option. So every 4 years, the rent increase after the term. After 15 years, every 4 years after that, the rent increase 10%. Okay. As an overall organization, their gross sales is $34 billion. They have over 18,000 stores. They are guaranteeing that, hey, we want to be here. Standard & Poor's rated them triple B. So this is a breakdown of how the rent increases over those options. Single tenant entity, one tenant, 100% occupied. This is just some details about the property again, now in word form versus a table. We focus on consumer products. For one reason or another, any of us, all of us, may have gone and shopped at Dollar General, whether it's for the holidays and you're getting banners for the 4th of July, whether it's quick dinner and you ran out of aluminum pans, you run to Dollar General to grab an aluminum pan. Some families shop for food based on economics at Dollar General. Sometimes you want to grab a quick composition notebook. You run to Dollar General, grab some pens for children for school and pencils for after school. They ran out, pencils broke, they leave them at school or whatever the case may be. Okay. So this is one of the criterias that stores, any of these retailers, look at. Vehicles per day, over 10,000 vehicles per day pass this particular location. Okay. And this is a photo of it. One of the things I like to point out when investing in real estate, whether it's residential, resi, or commercial, is what is corporate America doing? If corporate America is present, Kroger, Chick-fil-A, Lowe's, Home Depot, Planet Fitness, Walgreens, Waffle House, CVS, Walmart, if they are present, there's a great opportunity to serve the community. O'Reilly's, Ingles, BP. There's a great opportunity to serve the community. And it's a great opportunity for investors to invest in that geographic location. Okay. It talks about what's nearby: Metro Atlanta, Hartsfield International Airport, University of Georgia Griffin campus. Okay. So we talked about the road, the access, who's nearby. Okay. This looks like an industrial area. So they would serve a lot, and they have the necessary egresses to enter the property. Okay. 10,000 vehicles per day past this particular location. So that's generally how these properties are evaluated. I have a few more examples, and I will not be as detailed because it kind of repeats itself. But most all of our properties are currently off market. So, but generally, this is the data that we pull to vet and see why and how we would invest. Talked about population, 1 to 5 miles radius, the age, 40 to 45, average household income, anywhere between 80 to 100,000. Consumer spending in 1 mile is 6.8. In 5 miles is 313 million. They've done the due diligence to say that we want to be here to serve the community. Okay. Once again, triple net, opened in May of 2022, signalized corner adjacent to a Shell gas station. Based on our own consumer patterns, we know that this works. Our own. So we'll grab gas and then run to Dollar General to pick up something that the Shell doesn't have. Honey-do list. Can you pick up aluminum pan for dinner? Can you pick up some oil? We need some more mayonnaise. We need some ketchup. We need a quick loaf of bread. The kids left their pencil case at school. Can you grab some pencils so they can do their homework? Okay. 15-year lease on this one, 10% increases, 35,000 people or residents and growing. The credit rating, store count, net operating income, the bonus, the bumps, 10% after each option, after 15 years. They're guaranteeing, at least guarantee that they're going to be here for 15 years. And we're only talking about working with the investors such as yourself, anywhere between 2 to 5 years. Okay. During the entire term of the lease plus options, averages out to about 113,000 annually. This is that store. 15,000 vehicles on this road, over 4,000 vehicles on that. Who's here? Publix, Home Depot, Tractor Supply, Walmart, CVS, Piggly Wiggly, local regional airport, Great Wolf Lodge, Ashley's Home Stores, Ford, Toyota, another Walmart. I like to call them Wally World. It just keeps popping up in my head to say Wally World. I was introduced to calling Walmart Wally World. Yeah, great. CVS, the bus stop, MoneyGram. 15,000 vehicles pass this location every day. Okay, who else? Mickey's House Clubhouse, AutoZone, storage facility, car wash, apartment community. Population in 1 mile, 3,700. Growth rate, close to 4%. Okay. Talked about the household income in 1 mile, 62,000. Consumer spending in this area as well, 38 million. Okay, I'll jump into that question. Perfect timing. Great. If a tenant like Rite Aid goes bankrupt, how are their rent payments still guaranteed? Do you purchase? Okay, that's one question. You purchase. Okay, let's take the first question first. If a tenant like we don't, great question. We focus on need-based businesses that aren't necessarily internet, what's the word I want to use? E-commerce sensitive. Rite Aid, Walgreens, a lot of the pharmacy companies or stores, we have noticed have become more sensitive to commerce than some of these others. I have been studying this for an extensive period of time so that I can provide value and bring value not only to the firm, but for co-investors. Okay, so are their rents are still guaranteed, and or until there's another tenant placed in that property. Now, given that these properties are new construction, 2 to 5 years, we are secure. We believe that strongly that they will be there. They've spent the money. So if I would say they've done the due diligence, that's equivalent to saying they've committed financial resources to say, okay, let's just throw a number out of $150,000 to see what it would take to operate a 7-Eleven at this location before they build a multi-million-dollar facility or just $1 million facility. They've committed capital before they broke ground to see if Maine and Washington is a great location because of some of the indicators that I shared in regarding the other properties, demographics, income, who's nearby, what services and the complementary services are nearby. Okay. And do we purchase any triple net ground leases? No. Do we ever use debt to purchase these properties? No. I think that it's best that as investors, we capture the full revenue from the lease. Okay. How quickly will my capital be deployed once invested in TM? We currently are evaluating close to 30 some more properties. Immediately, FedEx distribution facilities, 7-Eleven, Amazon distribution facilities, O'Reilly's, and I have a spreadsheet. I'm going to go through that. Dollar General, yeah, immediately. Do you provide quarterly distribution? We provide distributions according to how the leases are structured. I love this question. If the lease, so let's just say there's 20 properties, and if 10 are structured to pay the lease monthly, we pay monthly. We disperse funds monthly. The remaining 10 are quarterly. Then every quarter, there'll be a bump in our distribution according to any individual's investment based on how the leases are structured. We follow, lovely question. We make it so simple. I just want to work with people who want to work with us, who see the opportunity, and hey, let's work together. Let's win together. It's a simple, great question. Thank you very much, Matthew. Okay, so as I shared before, I jumped into the second Dollar General. This is just another investment grade tenant, and they may have a slightly different set of criteria because of the different services that they offer, but I'll go through that as well. Excuse me. Okay, so with this 7-Eleven, this is the subject property. You see where they are, intersection. Gas always works great at an intersection. And now if we're having this conversation, you get to see real estate from a different perspective, from a different lens as we go about our lives. Like we'll go to the gas station, but we'll see that that gas station isn't doing so well. But we always go to this one. Why do we go to this one? It's on the corner because sometimes when I come off of Cullen Brand Pond, it's easier. Or when I need to get onto Mansfield or get off of Mansfield, it just works better than something that's not strategically placed. And 9 times out of 10, it isn't an investment grade tenant. Why? Because they've done the research over the decades of business experience and years they've been in business to say, we know we work best at an intersection. Okay, and this is that intersection, 30,000 vehicles per day. And how opportunistic is a 7-Eleven that uses gas next to an enterprise, proposed that they're going to build an enterprise in a daycare center with a housing community, townhomes nearby. Triple net lease, their investment grade is A. Their annual rent is close to $400,000 a year. Landlord responsibility is none. Lease term, 15 years. Rent has started already, 4 to 5 years, bumps every 10. Okay. They have over 77,000 locations and doing $5.7 trillion of real estate. It behooves them to ensure that when they build a location, it works. Okay. For this particular area, their growth in a 5-mile radius is 23%. 26,000 employees and average household income of $116K. Okay, this is more details about this particular property, what they're asking, what their NOI is, starting there. After 15 years, they end up here. Wawa. I think they are more northeast. I know they're northeast, but more northeast. And who's nearby? BP, Exxon. 13,000 vehicles on this road. Walmart, hotel, Verizon, Arby's, Starbucks, Ross's, Advance Auto, Lowe's, AutoZone, and some of the other brands that we like to work with as well. Okay, what they're asking, their NOI cap rate. And remember, I say asking. Okay, term of the lease 20 years, started in September of 2022. Rent starts out in the first 20 years at 150K, ends up at 265K. Okay. Now this one happens to be, Matthew, this happens to be an absolute triple net ground lease. And I'm just using this for illustration because all of our properties, the properties that we evaluate don't even have this data presentable to the general investor public, whether it be an individual, a high net worth individual who has the capital to raise, it's not ready. It's there, it exists, but it's not in presentation form. All of our properties are off market. Okay. Same details. This is a North Carolina property. Okay. 310. A lot of the details we went over before. Corporate. That's another thing. All of our properties, we prefer to work with corporate properties versus it being a franchise or franchisee. The corporation has a lot more experience than the franchisee. And I've been a franchise owner myself before. So I get it, I understand it, but and then I had, and they have a lot of support, but it works best when it's a corporate entity for our business model. Okay. So primary road, 31,000, tertiary road, 42,000 vehicles. Okay. And this is what it looks like on the inside. I'm a cigar aficionado, so I just wanted to point that out. Okay. 5 miles, 200,000 people, average household income, 91,000. Starbucks. Excuse me. Okay, there you go. STNL means single tenant net lease, corporate lease property, 15-year term. Okay. So what's unique about this? So this particular road has about 22,000 vehicles per day. This road to this access ramp, that's 20,000 vehicles, 2,000 vehicles. However, the freeway that has entrances and exits has 132,000 vehicles per day that passes by this Starbucks. And I just started drinking coffee. I haven't graduated to the Starbucks level. I haven't even graduated to the Dunkin' Donuts level. I'm still on to the best part of waking up is Folgers in your cup. Okay. So I'm still drinking Folgers. But, I guess I'll graduate and people tell me, hey, you got to get a cup of espresso from Starbucks. And I don't know anything about the grande and the different sizes, et cetera, et cetera. But as a real estate investor, as a syndicator who wants to present an opportunity to accredited investors such as those who may be attending and or watching in the future, it's an excellent opportunity. Excellent opportunity. Okay, and their asking price is 6.9. Excuse the misplacement, but it's actually 6.9 and the NOI is 240. Okay. Talk about the location, average household income, average age. Okay. So this was provided, this is was provided. This is based on the properties that were in this presentation, but currently we have about 475, $500 million worth of properties to take down with a minimum investment of 100K, okay, with an average cap rate of 4 to 8% in a term of 2 to 5 years. So this is a great time to take in any questions for those who may have any for the Q&A, and or if Michael, you would like to share something.
Yeah, so thanks for the presentation. As Solomon said, if anybody has any questions now, this is the best time. Warm up your typing hands. Solomon, just in case that no questions are asked and people want to contact you, what's the best way to reach you?
Okay, I am going to put my email address in the chat.
Perfect. And if you just want to read it out for people that might be watching the recording at
Sure.
a later date.
Sure. Admin at thomasmtrgrp.com. That's management group. So it's admin at thomasmtrgrp.com. I'll be happy to have a conversation, schedule a Zoom, answer any additional questions, walk them through the process when going through the portal. And that's it.
All right, perfect. We just got a question coming in from Matthew and another one coming in as well. Matthew's question is, what is your fee when purchasing a property? Am I investing into a portfolio or one particular property?
It would be into the portfolio, and the fee. Once again, I'm also a licensed real estate agent. Okay, so I earn a fee from the seller side. Okay, and then as a operator, it's anywhere between a syndicator, anywhere between 2 and 4%. So we leave the opportunity open for those who would like to share to earn on top of making an investment, et cetera, et cetera. And the minimum is 100K to invest. You're more than welcome to invest more. Once again, the interest earned is based on the investment, and the total raised currently now is about 500 million. The minimum investment is 100K. So if someone wants to invest, sorry about that.
No problem. I mean, if you don't have anything else on the screen, you can stop the share and we can finish up with the Q&A.
Okay.
It looked like you knocked out 2 questions for Scott and Catherine there.
Okay.
Now, obviously, as a self-directed IRA custodians, I assume these are self-directed IRA friendly investments as well.
Yes, definitely. Feel free to reach out to Michael. Right, they would reach out to you to help them through the process, correct?
Yep, absolutely. I would be the person that helps answer questions, set up the account, and tell them what to expect throughout the process. So my contact information was in the beginning of the presentation, but you can reach me at info@camaplan.com, info@camaplan.com, or our office number 215-283-2868. Just call and ask for Will, and I'll be happy to help you out.
Yes, please do. And for those of you who aren't with Camaplan, reach out to him and he'll help you create and start an account. And those of you who are, reach out, and you have the link to the platform. If you have my email address, if you have any questions, email me. We'll schedule a Zoom and we can continue or develop working together.
All right, perfect. Thank you, Solomon. Thank you for the presentation and lending your time. And I want to thank everybody who was in the presentation today and anybody who's watching it in the future, this recording. And I hope you, Solomon, and everybody else in the presentation have a great rest of your day.
Excellent. Thank you very much.
Thank you.
Bye, everyone.